Fund presents Invest Mentor in association with Network 18.
Welcome back. You are with us on this first episode, the curtain raiser of the INVESTMENTOR series, and we're in conversation with Nilesh Shah of Kotak Mutual Fund. Now, Nilesh, let's start with the equity markets. That is first love for a lot of people out there, right? So tell us, since we are in this new normal, post-COVID, the way businesses are shaping up, the way this economic recovery is taken a lot by surprise. Now here, if someone is building a fresh portfolio, what are the house rules you need to keep in mind, looking at the current context and today's reality?
So essentially, please understand your risk profile. If you're a conservative investor, you're better off in large cap. If you're an aggressive investor, you're better off in small cap or sectoral fund. The second thing will be your ability to withstand shock. No matter whatever, future envisages, there will be uncertainties, there will be events which we would not have comprehended, and that will create sharp volatility in the market. You should not be afraid of volatility. In fact, you have to leverage it to make it work for you to generate better return during volatile times. That temperament is absolutely necessary. The third thing for investor to worry about, and which will be regret of most fund managers, how does fund return and investor return align? Some of the studies in US, in India shows that the investor's return in a fund is about 0.5 to 0.7 times fund return. This happens primarily because investors end up coming in at the wrong time, or probably exiting at the wrong time, or doing both. It's extremely important to give time to your fund managers to deliver. All funds will not deliver similar return. They follow different philosophy, they have different capitalization, they have different style. So try to stay with the fund till such time your objective is achieved.
There have been a significant number of index funds and ETFs that have come into the market, and it is tempting to believe that you are safe over there. What would be your advice to those who want to know whether they should look for the alpha of the fund manager or just trust the index?
So again, there is a choice available. Index funds are like predefined thali. You get certain quantity, whereas active funds will be made to order kind of things, albeit at the choice of chef rather than the customer. But if you trust the chef, then many a times, we give orders saying that jo aapko acha lage, hame de dijiye. In my opinion, index funds, ETFs will have a role to play as we have seen globally. At the same time, there will be certain active fund managers. We will continue to add alpha to investors. Now, in Indian mutual fund context, do remember that most index funds underperform their benchmark index by about a percentage point across various time periods. This is primarily happening because TRI index globally is compared with gross of expenses return. In India, we compare net of expense return.
Constant advice we get that we are on the start of a real estate curve. And then, of course, gold as well has been doing well. Both these are traditional favorites for Indian investors who did not have too much of financial sophistication and products available earlier. What's your advice? Should one invest in these assets or even invest in real estate through the stock market, through mutual funds?
So let's talk about gold. I will certainly advise all the women not to do with a corner road jeweler shop a monthly investment scheme. It's quite popular today for ladies to go and deposit on a monthly basis certain amount, and then at the end of 11th month, you get ability to buy a jewelry with certain discount. Now, there is always a goodwill jeweler who can become bankrupt overnight and all your investments will disappear. Please don't go into such kind of investments. There is far better way to accumulate gold via gold ETF or via sovereign gold bonds. The second thing I will advise people, we all have pressure in family to buy gold on occasions. And some people buy bulk, some people buy in small denominations, 1 gram, 2 gram, 5 gram. Now, please remember that when you buy gold coins in smaller denomination, you end up paying premium between 15 to 35%. If you don't believe me, please go and buy a 1 gram gold from wherever you want and go and sell it to the jeweler. You will realize what I'm talking about. When you incur this kind of transaction cost, it is hugely expensive. You don't get break even after 3 and 4 years in gold at that smaller denomination. Please do SIP in gold ETF. The entry cost in gold ETF is far, far lower than buying small denomination gold coins. Gold is an important asset class. One should invest in gold. The most preferred option is sovereign gold bonds, where you get interest income. The second best option will be gold ETFs. And third option then could be physical gold, albeit try to buy in higher denomination rather than smaller denomination so that your cost or entry cost is reduced. In terms of real estate, mutual fund industry has a long way to go and launch really compatible products to real estate. I hope at some point of time we will be able to develop those products. But as of today, you can take exposure via debt mutual funds, which have invested into real estate investment trust and investment trust, or you can take it via equity, which will give you exposure to real estate and home improvement sector. But we really today don't have a product which can give you exposure to real estate like physical buying of real estate.
So finally, as we are winding down on this first episode of the series, Nilesh, you tell us, what was the thought process behind launching Investor Mentor, and what is it that you and your team are looking to achieve? I know we'll have lots of conversations on equity, on debt over the coming weeks.
So this is our way to light a candle in the darkness. When I look at my journey of 25 years in financial market, I feel happy that mutual fund industry now has about 2.5 crore unique customers, about 9 odd crore folios. But when I look at the potential, I feel we have barely scratched the surface. This is our way to improve financial knowledge among your viewers, reach out to as many people as possible and give them true financial empowerment through wisdom and knowledge.
Okay, that we always have got from you. Thank you very much, Nilesh Shah, for joining us in the maiden episode of the Invest Mentor series. With your comparisons and your metaphors to food, you have made us hungry for more in terms of investment ideas. You've given us excellent food for thought, and we look forward to your insights. In the forthcoming episodes of Invest Mentor, we are going to get many more rich ideas from the likes of Nilesh Shah on how you can make money with your money.